General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Okay, let's see. Middle of the month. The 16th. So, right now, it's our anchor. Where did that go? We can change the color. No, we can't. It's an emoji. I should be able to change some type of color. Here we go. There we go. This is something. So that looks like it's staying. Where's the start of the month? Right here. So this is our monthly open. Current interval below. The 4 hours the best for these type of monthly profiles. This is the monthly opening price. Kind of don't need this. This daily fair value gap is important. We already smacked this. It's 2 volume imbalances. Take that out. This, we can take this out as well. Sales and liquidity got smacked. Since this is month, let's make this way bigger. I kind of feel like I should have like a different color. That kind of sticks out a little bit. This previous week's low can go as well. Alright, so here. Now we're good. Keep that same energy. Okay. One pushed up, respected this, which was really just like a daily up candle, came to 50% of it. You just gotta respect that. Mm-hmm. It should be on top or in the middle. Let's make this invisible so it really just stick. Let's put it on top. Can I get? Yep, I got away with it. So that wick right there. Let me lock this because I'll be mad if I move it on accident. Okay. Monthly open, week 1 pushed, week 2 kind of a small range week. Man, that's invisible now. Let me do this. Let's get it off of invisible. Pretty much previous week's high. And I think this is significant because it's a smaller range week. This week high, that's still respected. We didn't close this. Let's just make sure it's not. That dash line is so tacky when it's not super thin. Let's close. Okay. We did rebalance this. This is like a wick zone with quadrants and all kind of stuff. This is the most likely draw for the week. Premium discount here. This handled the retracement and took out the low, but we did fail to close. That was respected here. Next week we do got engineer liquidity, all kind of little EOs here. Nothing, yep, a weekly one here. We didn't close it. We hit it on we didn't hit this on futures, we hit it on CFDs. It's October 25th still. It's like the finish line. Let's look for the flag. Do we think we have an anchor point for the month? Do I think this high stay? I think so. I think next week maybe a bigger expansion, and then week 4 we chop. You know, I don't know if I got the Dexter fibs on deck, but the Dexter fibs, he'd do like 3 deviations of this. Mm, I don't think I ever saved them. Man, I had some fibs where I can get that. I just want to see -1, 2, and 3, and 3.5. Yeah, everything's kind of lining up down here. 3, 2. I think he has like 2.5 is his reversal, but he fibs this swing. This this is ugly though. This down candle needs some action. So that's the draw for me still for the month. After we hit that for the month, we can retrace and engineer liquidity for next month. Nvidia's next week too. I hope we get this before Nvidia and Nvidia buy up. Well, I don't know. I kind of don't want that dude to lose all that money. Michael Burry. I like that movie. Mm, week 1 high stay until delivery objective. October 25th low is hit. I'm bearish. No shift in framework hit rate. Government shutdown over. So early morning, 8:30 red photo news. Season is around the corner, which is good. So that brings back the old hit rate. So to normal hit rate. We just be uncomfortable with change, but that's something we just gotta do. High quality and no mistake. High quality is waiting. Waiting like a monk. Mistake. Shooting back to back. Playing moves. Trying not to miss it. Time frame context review. Did the monthly buys I said at the open. Yeah, we hit that. We were bullish. We hit a lot of them levels. I don't know why it's lagging. Oh, maybe I should have hit the link. Yeah, that's much better. 26, 27. Because we almost hit, well, we probably way past that now. think no. So no. No, I was bullish to start the month. And November 1st, been following ever since. No early, mid, late month timing. We in hollow printed, not session timing. Really, it's week one really printed the high. Yeah, week one expanded. Week two retraced and dropped and swept the low. Hold on. I don't know how I did that. Dropped lower to sweep. Previous week's low. Retraced. Expanded. Which weekly expansions actually built the monthly candle? The week one. What did price mitigate? Previous months. It's really you could say rejection block, order block, 50%, but we kind of just gapped and dropped so fast. You can't say we tested that level, but we did react here. And it technically is an order block. The daily, it's really the H4 daily, daily range, H4 array. Mm, that percentage taking this month, say more low probability trades have been taken this month. Um, Shooting in foggy conditions and back to back losses took its toll. Narrative framework and accuracy. Forecast that monthly low for first point. What I read wrong, well, really is narrative. Like Monday's like super small range day, and then it's just like this started that drop that Tuesday. It changed the whole month. Yeah, we just opened and melted. And I remember it's like the government shutdown is over. They made that deal. We was worried about data. Well, this ain't government shutdown over. This is government shutdown over was this week. What is this drop? What date is this? The 4th. 11, 4, 25. Stock market headlines. Do, 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 do. It's NVIDIA. Amazon, boom, boom, yeah. I remember that, but that was good. AMD, I remember all that. Uber, yep. Government shutdown. They just worried about AI. It's crazy. So let's go back here. If I hit this, it takes me here. Getting back to the middle of the month. Sentiment shifted. AI. Yeah. Nasdaq got hit the worst. It felt like fake news, and it still does. This looks like a retracement to fair value. Let's keep pushing up. What are they really worried about? Oh, we worried about AI, the thing that keeps getting better and better. Come on, make it make sense. Um, just back to back. Losses on playing move. Vault reference, no. The vault reference is the Asia highs and silver in Asia. And the best days on the wrong side. Asia not tapped in a good range. Regular trading out of the gap. Asia highs being engineered liquidity. That was the thing. Monday low thing. Monthly, weekly. Okay. Monthly is just. The best trades really is this one. From here to here. Short. Then Thursday. That's the delivery to aim for. Aiming for this one was cool too. Hold on. This week, we're here with the Ferris swing, but it didn't hit to the end of the day, so I don't like that. This one's like, you could call this at New York. This is 9. You could have called this. I think when it opened, this was like unforgiving. One of these was too. This is 5. This is ugly. This is 13 ugly. 9. This is good. Fifth time of day. It has confluence. Like from here. This is just for the gap. I remember this. This was good. This gap. Each week did give a good sale. A good H4 sale. I only need one image. Each week the model showed up. One live, one shot, one kill. Now to catch it. For real. Alright, so the first one, Tuesday 9 o'clock. The second one, Thursday 1 o'clock. MH4. And 2. Thursdays have 1. It should be 915. Oh, yeah, that makes sense. Yeah. Those are classic times. 9 a.m., 1 a.m., 5 a.m. is usually engineer liquidity. Alright, that's middle of the month. Three things. Bitcoin dropping. That Bitcoin sale, man. Shout out to those guys. Take this off. Yeah, Bitcoin Deuce is winning. Government shutdown over. We should have data. Okay, next week. Ooh. Hold on, pause right quick. Okay, we ready. Okay, this fits. I was gonna say I'm gonna have to take off some of this stuff. Yeah, I want the numbers too. Hold on. Oh, the bank president speak on Saturday. It's gonna be interesting. I just hope I'm in profit. I think they cut rates too. Okay, so Waller speaks. Minutes Wednesday. This is the thing. FOMC minutes Wednesday. I'm expecting Wednesday midweek reversal. most important thing. Because the Fed been hawkish and power tripping. California Fed told Powell gotta cut rates so we can get the AI boom. We need low rates to attract investors and build the economy, which probably go to corporations. The politics involved with that. Attract investors and build an economy. So the minutes going to be what everybody look at to see which way they leaning. They all kind of move on the script. Politicians too. But that's good because you can trade it. You can complain about it, but might as well just trade it. COT will be coming back. Can't wait. Government shutdown is over. Smiley face. Fed watch. Okay. So we had 44% chance. We're not looking like gonna cut rates. It goes with we need to see the Fed or the FOMC minutes. To see what's really going on. That makes sense. I'm explaining it good. Sounds like it's my journal. Shoot. You explain it in your journal. Ooh, Wednesday's NVIDIA too. So Wednesday, man, reversal. Anything else top 10? Because NVIDIA, you will miss everything. Home Depot is important. Everybody is important. Walmart is important. That's a good company just to own. Because Walmart ain't never going out of business. Yep, I double check. It is NVIDIA. Let's get the sentiment. This has been the COT because nothing else been coming out. God's bearish. We're bearish in sentiment. And it shows in price. And sentiment. And it shows in price. So that's telling me we have a stop line. Because it's two bears. There's two bears now. I don't think they can't make it too easy. For real. Let's get 9 weeks of days. 9 weeks of days. 1, 2, 3, 6. 9 weeks. Let's go here. We'll go there. That's correct. Take this off. This is our new area. I like how we got those expansion projections. So this kind of lines up with this too. We really don't need no new levels. Look how we hit that double inefficiency I was looking at. This would be the stop plan though. Just, like the same thing. Oh, it's two bears. They can't make it too easy. Like hitting this and then coming back down would just be devastating, especially if it's mixed with NFP and things that got the VIX up high, make it hard to trade. Hopefully mapped out. If the market wants to inflict max pain, it should punish all the bears. Push up to the daily fair value gap. And then go back down to October 25th low. Punish, not pushing. Blow clear mapped out. The market wants to flip max pain. It should. Oh yeah, push. I'll push all the punish all the bears. Okay, yeah, that's right. Boom. There we go. Then it should go clear mapped out. Market wants to flip pain and punish the bears. It should push up to the daily. It should push up to the daily F. Then go back to the bump point. Okay, cool. Anchor point integration. Daily high is unchallenged. Yeah. Story price alignment. AI fake scare. Because nobody really scared. Government shutdown over. It's interesting too because I had seen this thing. It was talking about how they talk about stuff on the news on purpose, like that AI scare. Nobody's scared of AI, but they just say it on the news. So people just be like, "Oh, AI scare." It's like COVID. Sure, engaging. They crazy. They think we believe it though. It's so much easier when I got the level there. So here we go. Mm-mm. This is not needed. This we kind of did the type 2, but we smacked that. That's done. Nothing new to add here. You could kind of look at that, but mm-mm. Push through it one time. It's good enough. Yeah, there's nothing new to add here. I still like this. That's still my level. $4 move. Okay. Mm, oh, it's just this liquidity line to the downside. Anchor point interaction. Creating a fake swing last week, but the macro high is holding and it's solid and protected. This could be a big swing. Store the price alignment. Still should be bullish. Due to government spending, and it's going to get worse. But we risk off spending. It's going to get worse. But we risk off. You might can't tell because NASDAQ is feeling the AI hype or fake news. But the Dow is pumping. People are going into stocks. So metals are falling. We engaging here. Look at the euro. Let's get this. Boom. One. I think that's it. It is. It'd be so these little bitty candles. It'd be like, boom, this is what we have. Anything new here? Nah, not really. You can take that off too. Daily order block, still untested. This is a good solid low. You can retrace these type of ideas, OTE. So this would be discount. Take this off. Let's just see if this will work. Some brighter and lighter. Engineer high. We probably should retrace, sweep some liquidity, and then smack this couple of stuff. This 20-day high is important too. I'll watch 50% of this expansion range. And it's kind of paired with this though, so let's just do this. That's around 50%. Hold up, let's take this off. So here's a good buy. Here's a good target. It's a swing target, but that's the map. This low should stay. Notes, nice expansion up. I like internal liquidity sweep around 50% of expansion. Stop longs and target 20-day look back next week. Yeah. Wednesday might be expansion because I think they're gonna be like, we need to cut them rates, but we'll see. We plan on engaging here. Anchor point interaction. We think this is it. Hold up, I gotta do this again. Let me do a daily anchor. Hold on, wait. Bam. Gotta make one for the daily. Okay. Current interval below and save as daily anchor. Alright, we in the game. Oh yeah, we already got the picture. So anchor point interaction. I haven't tested the order block. We had a retracement, so it's not confirmed with a higher low or a retest of the level. Retest. This is H. Restore the price alignment. AC turned around. Forex has been activated. Boom. Skill focus here. Both sides of PC. Model showing up even in let's say wacky news, no news, really any environment. And it's showing up during the time we expected. So just London, New York AM, Tuesday through Thursday is the focus. Terminal intent. I'm gonna get more intraday delivery. Case study and plan. We always studying the delivery and draw liquidity. That's what it's about. We're not super aggressive. We can do conservative things. We're getting back to normal. Plan to strike Wednesday. Set all the news and everything. This needs some space here. Alright, this lined up pretty good. This needs some space. Alright, cool. Alright, that's it for the week. What does it look like on the weekly? What is this strike price? Hold on, here we go. 589. And that's the weekly. This is ideal though. It looks like we got it already. So this is more ideal because that already got tagged. If we go for a gap fill, we do got this down here too. For some longer option plays. Super interesting. This is the TP3 for the options. I don't think I can do all that stuff. Oh, I can. Currents going below. Do this one. Oh, I'm in there. I'm in the game. Where's this at? Alright, cool. Boom. Oh, this is there. Alright, ready for the week. Alright, y'all keep it cool. Peace.